So one of the primary questions that we hear all the time from folks is, do I need to pay estimated taxes or should I pay estimated taxes? And how much do they pay? So to talk about that, um, the answer is vast majority, 99% of the time is for sole proprietors is yes, you should be paying estimated taxes. And that means that the IRS basically has a pay as you go system. So if you work for a company, normally every paycheck you get, your employer would be taking out taxes out of your paycheck. But because sole proprietors don't work for a company, they work for themselves, the IRS wants to make sure that they get their money that's due to them throughout the year, not all at once at the end of the year. So the short answer, yes, sole proprietors should be paying estimated taxes, and they're paid 4 times a year. You pay them 4 times a year. The next estimated tax payment coming up is September 15th. It is. So, and how you calculate those estimated taxes is you really need like help from an accountant or somebody like Chris to do some of the calculations on those. But the great thing about Outright, if you're using a bookkeeping system, it helps you do the calculations. It does the calculations for you. Um, so what I wanted to do is go through how Outright can help you with estimated tax calculations, and we'll talk specifically within context of that. Okay. So one of the things that we definitely share along the way is we can certainly answer questions, but we definitely recommend that you talk to an accountant and get tax advice from an accounting professional. What we've learned and shared is from talking to hundreds and hundreds of small businesses over the years. And so we have definitely know the different scenarios, but we recommend you talk to an accountant. So what I wanted to do before we specifically dig into estimated taxes is just do an overview of Outright. It's just a quick snapshot for those of you who are not familiar with Outright or haven't used it before. And Outright covers not only estimated taxes, but annual taxes and sales tax too. We'll touch on those very briefly within this. So for those of you who don't use Outright or are new to Outright, Outright is online bookkeeping, and the whole idea behind Outright is making sure that you have the simplest, easiest way to keep track of all your sales and expenses, so that you don't have to manage spreadsheets and keep track of things on post-it notes and have piles of paper everywhere, and that it's automated. So the key thing about Outright is it helps you automate all of your bookkeeping tasks. So you see there, you link all of your different accounts that you use for business, like a credit card or your bank account where all your income and expense transactions take place. And then Outright imports those for you every night. And as it imports them, it categorizes them into the different IRS approved tax categories. And that's really key because when you go to do your taxes, everything is organized and categorized for you all the time. The other piece of having everything all in one place is that you can actually see how your business is doing. You can see your profit and loss. You can see, finally answer that question of where is all my money going. Um, and so it helps you stay organized, it helps you with tax time, and it helps you see how your business is doing. There's a free version of Outright, which is obviously free, and then there's a paid version, which includes all of the tax information that we're going to talk about, and that is $9.95 a month or $99 for the year. Okay, so this is the dashboard or homepage within Outright, and you can see here once you link your accounts, this is what automatically happens. So in the upper right hand corner here, you'll see it'll calculate your profit and loss for you. In the bottom right hand corner, it starts calculating and categorizing so you can see how your expenses are breaking out, where you're spending, where your money's going, basically. Are you spending it on office supplies, shipping, entertainment? And then along the left side, you can see Outright will show you all of the new sales you have. it'll show you expenses that you have that are uncategorized. And this is really important. So outright, it doesn't understand everything that's coming in. So for example, if you have an expense that has, an odd name, and outright can't understand that it's office supplies, it might not categorize it. And then you'll have to go in and categorize that, but it'll remember it for the future. And then the money I have section here is all of the your income accounts that you have linked. Money you owe is any credit cards. And there you see in the bottom left where it starts showing you taxes. So it gives you the dashboard view. And across the top, you see each one of these tabs that says income, expenses, reports. There's drill down into each of those that you can see. So you can see transaction by transaction that gets pulled in from a credit card. And there you can see um, Sugar Sync there on July 26th. You can see outright couldn't tell what that was, so it didn't categorize it, but you would go back in and categorize it as a business expense or something related to your business, like supplies. And it has the same thing for income as well. So you can see the detail of each transaction. Okay. So if everybody sees this picture, this is kind of the gist of what we hear when it comes to tax time. It's really painful time, especially if you haven't been keeping track of all your sales and expenses throughout the year and you're trying to do everything come tax time. Whoops. There we go. So we want to get out of this mindset. This is a tough situation to be in. So with outright, the areas of taxes that it will help you with, it will help you with your annual taxes that you file every year in April. You get an income and expense summary, and for sole proprietors who file the Schedule C worksheet, you also get a Schedule C worksheet that's automatically filled out. It helps you with estimated taxes. We'll talk specifically about that. And then sales tax. We're not going to get into sales tax specifically today because that's a whole webinar discussion on itself, especially for online sellers. So we're going to skip that portion, but Outright does handle that for you. So again, within the outright product, you see the taxes tab there. And if you click into that taxes tab, this is the first section that you'll see. It's your annual income and expense summary. So you can see it also helps you along the way here. So under there, you see where it says your net profit. It's telling you exactly what your net profit is. And remember this is really important so that because your net profit is what the IRS uses to determine how much you owe in taxes. And so you want to make sure that it's your income minus all of your expenses and deductions. And then if you move down to the middle section under income, this is where you start seeing your tax categories: gross receipts or sales, cost of goods sold, and Outright has been pulling all of your transactions into each of those categories. So you'll be ready to go here at tax time. And then below that, under expenses, again, it's been pulling and categorizing all of your expenses in, so you don't have to recategorize them at the end of the year. So that's the annual tax summary that you get. And all of these are actually printable too. So you can print them and take them to your accountant for help. The Schedule C worksheet. So sole proprietors file a Schedule C worksheet with their personal annual income tax. And the Schedule C worksheet here that you see in Outright, the form, the numbers, and the description actually follow exactly how the Schedule C tax form is laid out. So here you can see income, part one, gross sales, and receipts. And then if we look at the actual Schedule C form that gets filed to the IRS, there you see part one, income, gross sales, and receipt. So Outright is automatically filling all of this out for you, and it's mapped exactly to the Schedule C format. So what people find so valuable about this is everything's categorized. You can literally print this out and bring it to your accountant, or if you use a TurboTax, something like that, you can follow the numbers and the amounts and just plug them into the boxes. So that's the Schedule C and annual income. Now let's dig in specifically to estimated taxes. So how Outright helps you with estimated taxes is it calculates the estimated tax payment for you. So first of all, that's one of the challenges. People know, should I pay estimated taxes? And if I should, they have no idea how much that they should be paying. The other thing is when are they due? You've got a million things to keep track of. This is just one additional deadline. And then you want to track how much you paid to the government each quarter so you have a record of that. So this is the estimated taxes screen, whoops, within Outright. And you see in the upper right hand corner there, Outright makes shows you the total of what you, the running total of what you will owe for that period or that quarter. So the $1,500 there is what's owed for the current period. It'll track that for you. In number 2 in the center there, you see when it'll tell you when the payment is due to the IRS. And then over to the left, you see Q1, Q2, Q3, Q4, and you see those estimated payments. So Outright estimates calculates your estimated tax payments based on the actual earnings that you have in Outright. So for all of the income that you have coming in, minus all of your expenses, you've got your profit, and that's what Outright calculates your estimated taxes on. So if you remember a couple of slides ago on the annual income summary, we saw net profit at the top, and it said this is what the IRS uses to calculate your estimated taxes. So that's how your estimated taxes are calculated. And Outright calculates the estimated tax payment based on the earnings that you have for that year. So starting in January 2013, you've had a certain amount of sales and you've had a certain amount of expenses, and Outright is calculating your estimated taxes based on the current period there. And so if you click on or you hover over any of those amounts in there, like the 1550 you see, it will show you the breakdown of what percentage goes to each of those: Social Security, Medicare, income tax. And those particular rates, the 12.4, 2.9, those are rates issued by the IRS. They call them the marginal tax rates, which is generally similar to tax brackets at a high level. But you can imagine if you had to go figure out how much you owe, and then you'd have to figure out how to divide each of those, what percentage goes to each of the different Social Security, Medicare, income taxes. It really is a hassle to have to calculate all of that. So Outright actually does all of those pieces for you. And then if you look under the amount paid, you can actually record a payment in there. You see the $4,000, $4,028.88. So you would know that you had made that payment to the IRS. Now, the one thing that Outright doesn't do for you is it doesn't actually issue the payment to the IRS. You do have to send them a check or pay by credit card, or you have to submit your payment. This just allows you to record the payment to the IRS. Okay. So in terms of taxes, how Outright can really help you on this is your annual income taxes. It includes the Schedule C, estimated taxes, and I mentioned it does manage sales tax and track that for you, but that's a whole other discussion in itself. So I know that was pretty fast. Let's dig into any questions that we might have on estimated taxes, whether with Outright or some estimated tax questions in general. Okay, so we've got a question about, can we go back a year or two and upload previous year's info? So Yes, you can with an outright. It's a little bit of work. So when you first link your accounts, what will happen is a bank or credit card usually will only offer you the past 90 days of information. You'll have to reach out to them and ask them for an Excel or CSV file for previous years, and then you can upload those files directly into Outright. It's a little bit of work if you're going to add previous year's information, but you'll have then everything all in one place. Now, if you adding PayPal or something like that, PayPal goes back years, so you don't have to worry about most current information with PayPal. Okay, let's see. Okay. Okay, so we have a question here back on the outright, this estimated tax calculation here. Um, oh, yes, I see. Sorry. Um, so the question was around how come the little yellow box drop down doesn't add up to the 1550, and uh, it's because if you hover over, they would. This hover actually is from a different amount. Apologies for that. It's from a different screen, so apologies for that. But yes, it hovers over and it shows you the actual amount. Okay, let's see. Okay, so we have a question. When do you have to make the first quarterly tax payment? I only recently started profiting and missed the Q2 payment I was supposed to make, but I hadn't previously paid any estimated taxes. So um, let's see. There are penalties if you don't pay your estimated taxes. Now that said, the IRS is not really heavily tracking down and following up on some of the estimated tax payments. It's more as long as you pay your taxes. But the idea is that you don't want to be surprised by a tax bill all at once, and you want to make sure you're able to spread it out, and it's actually based on the income that you're earning. So if you have a slow Q1, say, but you've got like a big Q2, you want to make sure you're paying based on the income that you're actually earning. So I believe the IRS has detailed information about tax payments, and if you miss a tax payment, we can certainly do some follow up on that one to get you an answer. Let's see. Okay. Um, let's see. So there's a question about estimated taxes seem to be for those businesses who have been selling for longer. For example, I haven't paid estimated taxes yet, only sales tax. I think it's because I haven't made enough yet. So the requirement for estimated taxes is if you expect, and this is an IRS guideline, if you expect to owe more than $1,000 in taxes, then you're required to pay estimated taxes. And for most people, for the vast majority of people, um, they will have to pay estimated taxes, or they will what I'm trying to say is most people will reach that limit of having to owe $1,000 in taxes. And so that's the criteria that the IRS uses. If you expect to owe more than $1,000 in your annual taxes, then you need to pay estimated taxes. And really, they just want their money over the period of the year. They don't want it all at once at the end of the year. So it's not necessarily about how much you make, it's the IRS guideline and rule to make sure that it's paid over the course of the year. Okay. So there's a question here about do personal expenses reduce your deductions? So if you're using outright and you have a credit card that you say use for business and personal, you're able to mark your personal transactions in outright as personal. And when you mark something as personal, it then does not get calculated in your business reporting and business expenses. It is just hidden, and you'll go to the non-business tab and you'll see that. So no, your personal expenses do not impact your sales, your business sales and expenses. There's a question about, does this work the same for a partnership um, or a sole proprietor? And that's really, there are some different guidelines slightly for partnerships. And we can have Chris, um, we can send out a Q&A follow-up about partnership and sole proprietors. And we can certainly have him dig into those. But there's some slightly different rules for sole proprietors versus partnerships. And really think about it. If you file a Schedule C, which is the business and income profit and loss with your annual income, which is what sole proprietors file. Let's see what other questions we have. Somebody's asked, what are the due dates for annual taxes throughout the year? And I am going to bring them up and show you them here. So the due dates for annual taxes here are, they're not exactly in quarterly payments, but they generally call them as quarterly estimated taxes. So it's April 15th, June 15th, the next one coming up September 15th, and then January. Those are the payment dates for estimated taxes. Just a good reminder to put those and have those on your calendar so you know. Let's see. Okay, there's a question about paying state estimated taxes, and this is a real challenge in that state taxes and sales tax vary so much from state to state, and there's different rules and different schedules. It's really encourage you to go to your state's website and find out information like even things like where payments go to different places within state government organizations and agencies. So it'd be really hard to talk about state taxes in that sense. Let's see, what other questions? Okay. Let's see. So here there's a quick question on we remove a bank account or credit card that was previously used but not lose any information, not lose any of the data or transactions within outright? Unfortunately, no. If you remove or delete an account or credit card, it actually does delete all of the transactions within there. But what you can do is you can suspend the account so that it will stop importing data from it. And so what's in there will still be in there, but it won't continue to bring in data and transactions. So this is a good question about estimated taxes on payment dates. So for September 15th, should you pay on that date or should you pay in August? And there's really, as long as you pay by the deadline, that's the most important thing. But it's really up to you, depending on how much you owe. I think in general, people like to hold on to their money as long as possible before they give it to the government, particularly if it's in some kind of savings or it's earning interest or something. I think people like to hold on to it before they pass it off to the government. But it's really up to you. It's more the most important thing is that you actually pay it on time. Great. It looks like there's some specific questions about the Schedule C. Um, and the categories and how you post a this is a good question. How do you post a Schedule C expense purchase of an office computer, right? So when you purchase things like computers or furniture or equipment, you start getting into equipment and depreciation type of things. So you're able to deduct a portion of that expense in the current tax year, and then you would deduct the remaining of it over time. Again, that's something that you'd want to talk to your accountant about to make sure that you're doing it in a way that works best for your taxes. But yes, the IRS has rules about the types of purchases that you make. Like computers and furniture and office equipment and how you're able to deduct them. So this is another question about I don't have a legal business entity set up, such as a corporation. Do I need to do this first before paying estimated taxes? And do I need an EIN? You don't need to do it before paying estimated taxes, but we do recommend getting an employee identification number because in the meantime you'll be using your social security number, and that means your social security number is it's on different forms, it's out and about, and it's just better if you for your business have an EIN number that you can then use and not have to have your social security number flying around in all of these different forms and paperwork. Granted, it's generally secure, but I think for business purposes, it also just helps you start legitimizing more. Okay, great. This is a good question. So if I didn't know that I was supposed to pay estimated taxes, which is the vast majority of people, I think the vast majority of people are unsure what they are and unsure if they should be paying them. And then once you learn, you say, "Oh, I've got this these amounts that I owe." And generally, what people have done is it all comes out at the end of the year when you do your personal income taxes in April. But I think again to not be surprised and be able to stay on top of it more throughout the year, it is better to pay them quarterly. And then also once the IRS knows, you want to make sure that you don't avoid that you avoid any penalties or fees about that. So um, there are some rules around whether you pay if you haven't been paying them. Do you have to pay and catch up all at once? Um, Not necessarily. I always say it's easier to explain to the IRS that you were trying to do the right thing than to sort of try and explain how you were trying to skirt an issue or buck the system, if you will. So that's always kind of the gauge when you think about should I do something or should I not do something. Okay. Okay. There's so many questions coming in here. And I know that we're not going to have time for all of them, but I'm trying to get to as many of them as I can. Okay. Okay, definitely. There's quite a few questions about um, how far in advance of the estimated tax deadline do you pay? And again, for those folks that maybe we didn't hear it the first time, is definitely the important thing is that you pay it on time rather than in advance. It's just make sure that you pay it on time. You don't get any reward for paying it in advance or any discount, if you will, for paying it in advance. Okay. Okay. A question about how to categorize a donation that you might make. Yes, within the Schedule C form, there are specific categories and areas for categorizing donations or charitable contributions. Um, there are requirements and restrictions about that, so you just want to make sure that you talk to your accountant and follow those so you don't get any penalties. This is a good question about the type of work. So this person says, I do seasonal work is a wedding photographer and I have a lot of work in the spring and almost no work in the fall and winter. So do you need to pay quarterly estimate or quarterly taxes? Again, the answer here is if you plan to owe over $1,000 in income taxes, then yes, you would need to pay your quarterly estimated taxes. I think the situation here would be if you've got a lot of revenue or profit during one period of the year in the spring, then your estimated taxes for that period would probably be not probably, they would be higher than your estimated taxes throughout the rest of the year. So again, you'd be paying probably a big chunk of it in the springtime when you do a lot of work and you're making more money. And then based on your income in the later parts of the year where you're not making as much, your estimated tax payments wouldn't be as high because there's not as much profit to calculate them from. Yes. Okay. Great. Are there any are there any additional questions that you guys would like to ask or any additional areas we'd like to go back over before we wrap up? Feel free to type them into the question box and I'll try to answer them. Great. So here's a question about starting a new business and how do you get started with estimated taxes if you don't have any income. If you don't have any income yet, then how do you know how much estimated taxes that you should pay? I think that really, because estimated taxes is based on your earnings and how much you expect to owe. That I would say I definitely would recommend that you sit down and spend time with an accountant and make sure you figure out how to do that so that it's in a tax situation that works for you. And I know that's the case with a lot of businesses. when you're first starting out. There's a question here about the difference between the outright programs. I'm assuming this question is about the free version of Outright and the paid version of Outright. So the free version of Outright includes all of the bookkeeping and reports, everything but the taxes information that we've been talking about today. The taxes information is all in Outright Plus, which is $9.95 a month or $99 for the year. Yeah, this is a good question about mixing business and personal expenses together. So oftentimes we hear and we see small businesses who are just getting started, or even have been in business for a while, is they commingle the finances, if you will. So that means you're using the same credit card for business and personal, and you're using the same checking account or savings account for business and personal. Um, we recommend it's okay to do that as a starting point, and when you're first getting started, um, if that's easier for you, we do recommend that you eventually do get a separate account for your business and a separate credit card for your business. It just makes life easier in terms of trying to keep things separate and trying to stay organized. In the meantime, if you're using something like Outright, there is a way for you to mark certain transactions as personal, and then they won't go into your taxes or your business reporting. So there is a way to handle personal expenses within Outright. But at some point, we recommend that you definitely get a separate account for your business. Kathleen has a question about paying sales tax. Kathleen, I will tell you, we'll follow up with you specifically on that one separately. As I mentioned, sales tax, particularly for online sellers, is a whole beast of a situation. But there is a way within Outright that we do manage it. We help you track the sales tax that you've collected um, and help you record payments similar to estimated taxes. Okay. 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 So it looks like we are just about out of time. I know we didn't get